Hi everyone, Stuart Coulthard from Rubik's Business Accountants again. And guess what? It is FBT season. It is almost coming to that time. 31 March 2024 is FBT. What is FBT, I hear you asking? It is called Fringe Benefit Tax. This is different to income tax. FBT relates to when a business or an employer is providing benefits to an employee, so a staff member, and it could be a director as well. A tax return needs to be prepared and lodged for this FBT return, for this benefit provided. Another thing about FBT is that it's different to the financial year. So the financial year goes from 1st of July to 30th of June. The FBT year goes from 1st of April to 31st of March. So we're really approaching it. This year, we're actually recommending for all our business clients to actually prepare and lodge an FBT return, which is a little bit different to what we've done in the past. And the reason why we're doing that is we feel that it actually de-risks your business from the ATO coming and looking at what the activities you are doing. So a business who has employees, including themselves, should really be doing an FBT return. Why we're saying that and why it de-risks you is, first of all, if you lodge an FBT, even if you don't have to pay any sort of tax, it stops the ATO from looking indefinitely and auditing indefinitely past periods. It's locking in a period of 3 years, so they can only go back 3 years, which is a real benefit, so they don't go crazy back. And also, FBT can interact with single touch payroll lodgements, so payments made to your staff members, so that's really important too. The ATO released recently, there was a gap in FBT collections of $1.3 billion. So the ATO forecasted out what they expected FBT collections should have been, so fringe benefit tax collections, and it was short by 1.3 billion, which was about a 28% gap, which is really, really big for the collections that they expected to do, which means that they're going to start to aim for low-hanging fruit. So looking at businesses who they think should have done an FBT return. So doing one really de-risks you. What they're doing is getting really a lot smarter in how they review businesses around FBT. So if you've bought or sold a car, they can look into that. They're doing a lot more data matching. Also, they're looking at logbooks, and if you're doing logbooks, and matching them to e-tags. So of the 900,000 businesses out there, they're saying that only 10% are registered for FBT. It's a really low-hanging fruit for them to do some sort of audit action. So again, our recommendation is doing an FBT return, regardless if you've got to pay tax or not. Obviously, we can help you out with doing that. If you've got any questions on what is FBT or what it relates to or anything like that, happy to help. Give us a call, give us an email. Happy to help. See you next time.